Good morning. Good morning, good afternoon, good evening, folks. I just realized my lights weren't on. It is Saturday, September 17th. This is our weekly live Q&A. This is a show that really is all for you. I would like to answer any and all questions, say hello. All you have to do is join, leave a comment. I generally riff for 10 or 15 minutes to let the comments come in. Today will be no different. But yes, if you get your questions in, get them in early, that will give you the best chance for me to give a shot. We do talk about super chats and super chats only on Saturdays. If today is like any others, there will be more questions than I have time. So if you wanted to get your question answered immediately, you can go ahead and send a super chat and it will jump to the front of the line. And something I saw on another channel during the week is they're trying to reward, I guess, bigger super chats. So I have no idea if this is work. Please realize you don't have to do this by any means. I'm doing this simply because my YouTube coach tells me, Michael, the more super chats you get, the more money YouTube makes. And the more money YouTube makes, the more YouTube will push your channel. So on Saturday morning and Saturday morning only, I talk about super chats. And today, what I will do is if, only if, I get a $50 super chat, so 50, I will not only obviously answer your question, but I will send you an autographed book of one rental at a time. So I have a few of these in the office. It's been reviewed on Amazon. Thank you, almost 1,100 times. If you want an autographed copy, a $50 super chat will do that. I just have to figure out how to get your address. Don't put your address on, comments because that's foolish. Maybe tag me with an Instagram message or something like that. So again, if this is something you wanted, there you go. Again, if I don't get any, totally okay. I just wanted to put that out there, see if that worked. So a couple of things I put in the title for this video that I wanted to talk about. First and foremost is iBuyers. I think what we are seeing is iBuyers are, frankly, in a lot of pain. We have been talking about iBuyers probably, the last 45 days or so. We've given you several examples of students or followers who have gotten tremendous deals with buying from them, right? So the story goes, if I remember, basically look for days on market over 90, over 90, and then start writing offers. And of course, follow up. All the folks who I know who have gotten amazing deals from iBuyers, they've followed up several times. They wrote several offers. So this is a process. This is a dance. But iBuyers, generally speaking, are companies. They're not they are companies. They're not people. So they have 90-day windows where they have to report quarterly earnings and things of that nature. So it is, go get the best deal you can, right? I really think iBuyers are going to turn into banks where they just take what they can get and move on. I think a lot of iBuyers, let's talk about Phoenix, right? Because I had some data. John Wake, I think, was the first person to bring this to others. To me, others have validated. I think it was Open Door, but it might be OfferPad, or maybe it's both combined. Basically, iBuyers at different times here recently have had 15 to 20% of all listings. It has also come to my attention that they have really slowed down buying, as they should, because they're not making any money. So again, iBuyers really have the opportunity to be this overhang in the market. Frankly, if I was one of those iBuyers, I would not be trying to sell these one at a time. As time goes by, it's kind of like death by 1,000 cuts. What I would do is realize you have a horrible business model. I would either A, turn into a landlord, which they're not really set up for, or B, I would call 4 or 5 private equity firms, maybe a couple insurance companies, and say, hey, I've got these 1,250 homes in Phoenix, Arizona. How many of them do you want? Or I'm selling them all in one swath or something like that. iBuyers need to get this behind them. I think the worst thing they could do is sell one at a time. I think working with iBuyers, I think we as investors want iBuyers to sell one at a time. It's slower, it's costly. We get the best deals, we get all those things. But the best thing for the iBuyer is to sell it all at one time. Clear the decks, be done with it, revisit the business model, and move on. So I think there are iBuyers, and if you have a market where iBuyers are at, you've seen it. The inventory is increasing. They're starting to have a cadence for price drops. So again, these are things that I am watching. Next, interest rates, 30-year mortgage. We need to realize that we've already taken out the June cycle high. The June cycle high was 6.28. As you have heard from many of my real estate experts, June, their markets crashed 50%. Transactions fell in many markets. I shouldn't say most. In many markets, 50% in the month of June, because we have learned that 6% is a psychological barrier. Why was August and July markets better? Because July, the rates were in the 5s, and in August, we had a couple of days where the average was in the high 4s. Well, we just crossed 6, and unfortunately, we just crossed 6% in the winter. And I think we are on a stair steps to 7%. You've heard me say that. I think what's going to shock a lot of people, specifically the crash callers, who are still talking about a crash in 2022, which I don't get, but whatever. I think we are going to see inventory listings fall. According to, I'm drawing a blank. What are they? It'll come to me. One of the data analytics firms that I follow and have talked about on this channel, inventory fell 1% starting on September 9th. They report weekly. So not this Friday, but the Friday before, 1%. So I think interest rates, Black Knight, thank you. Active listings fell 1%, and I think they fall going forward, which is going to be very interesting because, again, we've learned, if you watch the daily financial news this morning, that roughly 33% of deals are cash. I think, what was it, like West Palm Beach, 56% or something? It's crazy to think about. More than half the transactions are cash. So if we head into the winter and total transactions are less than 4 million, again, that's an annual rate. We have inventory that is falling. We're not going to get the price crash that everybody wants. In fact, I'm not seeing. Basically, we are entering the winter of discontent in the housing market. It's going to be crickets. It's going to be the frozen tundra. It's going to be whatever you want to call it, polar vortex. We're not going to know about the U.S. housing market collectively until March. At this point, it's all about March. What happens in March? Where is unemployment? Is unemployment 4.1, 4.2? Market's fine. Is unemployment 6.2, 6.3? Problem. Where is interest rates in March for 30-year? Are they 6.35 or 6 3/4? Are they 5 3/4? Has the Fed pivoted? Has the Fed paused? What is going on with the war in Europe? What is going on with China? There's a lot of things going on. I have no idea what's coming next year. I do know that there's no numerical way we see a pricing crash in 2022. The housing market doesn't move that fast. I can't believe I hear channels talking about it still. Whatever. But yeah. And then finally, the last thing we'll talk about before I get to your questions and comments, again, I will scroll to the top, work my way down unless there's a super chat. I saw a couple of posts yesterday that the housing market is just like 2008. As someone who's bought before, during, and after, I have to chuckle when I hear that. There are some similarities. I'll list them, at least the few that I can think of off the top of my head. But usually, when crash or negative or fear porn is created about '08, the idea or the mention is the '08 crash, we're going to do the same thing for the same reasons. I'm like, what are you talking about? What are you talking about? So there are a couple similarities. Roughly speaking, interest rates today versus what they were then, about the same, right? Low sixes, rough and tough, the same. Next, affordability was in the toilet, in the tank, very low. But that's kind of where, at least currently, now this could all change next year. It could all, I hope you heard that. Everything I'm about to talk about could change next year. I am going to talk about it as of September 17th, 2022. Right now, and again, this could change. This could change. As of right now, the President of the United States is not saying everybody deserves a house. The run-up to 2008, President Bush said everybody deserves a house. Pushed housing and urban development, FHA, all of this stuff. And from there, all hell broke loose. People were serious. I know if you weren't around then, you will not believe what I say. People were buying homes after I was declining them for rentals. Their credit, their income was so bad, I said no as a landlord, and they bought a home. That was the 2006, 7, 8 environment that led to the epic Great Recession. The lending standards today, compared to what was going on then, is not even in the same world. Could it change? Absolutely. I am again talking about this as of September 17th, 2022. So to think that we are going to see an '08 crash because the credit standards or lending standards or programs are just like '08 is either intellectually dishonest or just comical. So that's one. Second, and I've talked about this a bunch because this is really where the pain cascaded. It was the falling dominoes week after week after week. Was adjustable rate mortgages. Heading into this epic run, the last 2 years of the great housing run-up, 51% of loans were adjustable. Many of those were the pick-a-payment disasters. And basically what happened is once those reset, they became unaffordable. People had no equity. They stopped paying, and all hell broke loose. Heading into this environment, at least heading into 2022, 2% of loans, roughly speaking, were ARMs. That has since expanded. I think it's now 11, maybe 13% of new loans are originated as ARMs. But again, these ARMs are also very different. The average ARM period is 7.5 years today. The average ARM period back then was 2 years. So again, this is, ARMs could be a problem, right? If they keep going from 11 to 13 to 19 to 31 to whatever, it could be a problem, but that's a problem for another day. Again, if the average duration of ARMs is 7.5 years, that means resets are out in 2029, 2030, something like that. Again, it could be a problem. It may be a problem, but it's not a problem today. So lastly, the last thing I want to talk about, I guess, is the Fed Wednesday, the 21st. Will they go a point? Will they go point, or will they go 0.75? I, again, just want to put it out in the world that I want them to go full 1 point, 100 basis points. I believe they need to, I think what Powell really needs to do is make sure that Jackson Hole 8-minute speech is not the only time he talks tough. I believe Jerome Powell, if he wants to make people believers, must do 100 basis points. He has to shock the market, the stock market, the bond market. He has to show that he is in charge. That's really what Paul Volcker did. People call, getting Volckered or all of those things. But Paul Volcker was in charge. He raised rates on weekends. He raised rates 2 or 3 times a month. He was in charge. There was no question. Right now, Powell is still kind of running like, let me tell the market what's coming. Let me give the market what they expect. Yes, rates are going higher, staying longer, all of that. But let's, I really do. I hope for 1 basis point. I think the market would be shocked. I think they wouldn't know what they're doing. But you know what? Ripping off the Band-Aid fast may hurt in the moment, but it's a better way to go, in my opinion. So there we go. I talked for about 15 minutes. Let's make the next 45 all about you. Jeff, Mike, the daily financial news is one of a kind. Don't ever stop. Everyone, can we please get a round of applause for Norris Drive, the property that started all? How much is that house worth today? I haven't looked. If I had to guess, probably 325, maybe 325, 350, maybe somewhere in there. Just a guess. I haven't looked. Chester, good morning. How are you? Roldan, good morning. How are you? I also see mainstream talking about 80% of mortgages under 4 and other people talking about core now. It's unreal how correct you've been. I can only hope you're wrong about prices. Yep. I'm pretty good at this. Yep. Again, prices. Let's talk about prices for a minute. Because I still don't think everybody understands. I'm talking about the national median home price. When I make these housing calls, national median home price. That should mean absolutely nothing to you or anybody watching this. I'm talking about the national median home price, frankly, because it's intellectually stimulating for me. It is something I've been tracking since I was in college. It is something that all economists geek out about. And my call is very different than others. Mark Zandi and, some very well respected. And let's just be honest. I love it when I am right and they are wrong. But again, anybody watching this, any of my followers, any of my students, shoot, even me and Olivia, we don't give one rat's ass about the median home price for the U.S. We care about Fresno. We care about our buy box. Please, please, please realize that your market could fall 10, 15, 20% while the median home price goes up. It could. That's just how math works. We could see median home price, like I am calling, basically flat for 5 years, and half your markets go down and half your markets go up. Please. I still think I'm going to be right, Jeff. I think a lot of these crash callers don't understand A, economics, don't understand B, that real estate is not a TV or a computer, and you got to live somewhere. You don't understand that 80% of mortgages are below 4%. I think, and then lastly, I think all these crash, or not all, I don't want to say all is wrong. Many of these crash callers don't care about their viewers. Many of these crash callers are getting big and making bank because they have tapped into the vein of fear. I want to say that one more time. Not all. Many of these channels do not care about you. I care about you. I tell everybody to do the work. I'm not telling you to buy. I'm not telling you to sell. I am telling you to do the work. You get off your ass, go figure out average, and if you don't like the yield, then don't buy. It's a hell of a lot better than, hey, wait for me to ring the bell like Pavlov's dog so you can come eat. These guys will never tell you that. They've never done anything. They're still renters. And the sad part is most of these folks are making bank. They're going to go buy a home on YouTube and they're going to get paid and own an asset, get on the property ladder while they're preaching fear to you. I think it is so disgusting. But that is capitalism. That is capitalism at its finest. And it will be fun to watch when these fear channels show their TV or show their new home. Look at the new home I bought. I've had 53 crash videos in a row, but look at what I bought. It's going to be so funny. It's going to be so funny. But yeah, I'm not changing my call. I think real estate's flat and by flat, plus or minus 2%, plus or minus 3%. No double digits. Housing doesn't move that fast. Even in the Great Recession, which we've looked at 100 times now, the largest yearly decline was negative 8.9%. We had 5-year negative. Again, a lot of these people are still talking about housing crashing 30% next year. That is comical. 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 They don't understand. Could one market fall 30%? Of course. Would the nation fall 30%? In the greatest real estate crash that we've ever seen, it fell 8.9% in 1 year. Yeah, it really does. Sometimes I got to smile. One of these crash creators who has 53 videos in a row, puts out a video, gets 100,000 views in 24 hours, makes 10 grand in a video. It's like, wow, that's crazy. So crazy. And maybe it's not 10 grand. Maybe it's $1,000. I don't know. Whatever the math works out. Crazy, crazy, crazy. Hey, Jeffrey. Yep. Puppies are fast asleep. Thinking about the Fed funds rate, what's the highest or lowest you could see it close out at year end? Ooh, that's a good question. So Fed funds, that's the overnight lending rate. I'm actually going to give Ken McElroy full credit. I agree with him 100%. I've actually said it on my channel. But I want to say I agree with Ken McElroy. So that means we're going to get 75, 75, 50, which is 200 basis points. So we'll end the year at 4.25 to 4.5, right? Because it's a average. So let's call it 4.25. That's what I think. That's what I think the funds is. So that's my call. I think on the low end it's 4, and on the high end it's 4.5. Could they really go 75, 75, 75? Maybe. But yeah, I'm going to call 4.25. Johnny, if someone was looking at buying a new home, what advice would you have for them in working with a builder? So I've never done that. Again, I only can give advice on what I've done. The only thing we bought from a builder was the house that we live in. I could tell you I was in Fresno over the weekend, or I'm sorry, not over the weekend. What day was that? Thursday? And several of the people I talked with who are in contract to buy new homes are getting significant discounts. One couple that I'm good friends with and has been on this channel, they're buying in a new gated community. Call it, I don't know, call it $800K. So nice home. And you got to remember Fresno's median's like 500. So this is definitely above the median. They just got their builder to give them a $60,000 reduction. So if you're working with a builder, extract everything you could. Get rate buy downs, get concessions on I don't know what you call them, but like get free upgrades. And and again, get a discount. The other thing I would do if I was working with a builder is I actually might go to finished product and offer a crazy number, right? One of the things we're learning about builders, and again, is just like what builders are like Walmart and Target, folks. Right now, builders are having inventory canceled, which means they have inventory on the shelf. And builders don't want inventory on the shelf. It's not their business. So you could go there and I would write a crazy offer. I'm just making stuff up. Let's assume a builder's got 3 ready to deliver models and they're at 500 grand. Just completely making these up. And you like the home. Obviously, it all boils down to liking the home. I might write something stupid just to take their temperature, because what are they going to say? No? Great. I might write like a 450 builder, concessions, and, the builder gives me 2 or 3 points to rate buy down. Why not? What's the worst thing the builder can say? And again, the other thing about builders that people don't understand is once this ready-made inventory is gone, it's gone. Builders are slowing down. Builders are laying pads and then stopping. A lot of these people that are calling for crashes think builders are going to keep building just because. That's not happening. Builders are already laying off people. Builders are slowing down dramatically. Builders are having buyers actually get construction loans. Builders are changing behavior. But you do have this little bit of time where they had somebody in contract they canceled, so they have ready-made inventory. I would be a cheap ass bastard and write a crazy ass offer and see what happens. That's what I would do. But again, you have to like the home, you have to like the area, all of those things. So good morning, Layla. Congrats on your card. I think it went out yesterday. Better Home Rental. Good morning. How are you? I believe 7.5 might be the peak for housing. Not sure what that means. I think you're saying 7.5 mortgage rates. Could be. Could be. I mean, I have no idea. I mean, when I look out, I certainly can see the housing market through the end of the year. I could see the housing market through March. But I have no idea what the spring selling season is going to be. I have no idea where the economy is going to be. We could be in a worldwide recession by March. Or the war could be over. China could stop being stupid with this virus. And the economy could start cranking. I have no idea. March, the next, what is that? October, November. Yeah, next 6 months are the most uncertain 6 months of my adult life. No idea what's going to happen. All I know is I'm going to keep showing up, keep looking at deals, only write great deals. Yeah, it's crazy. Good morning. Mike, how goes the ADU? One of the things I did is I met with the team up there. I think I'm going to do it. We have to have we have to have a solar company come in and, I don't know, write some plans or something. Another $650 in plans. But I think I'm going to do it. I think I go back and forth. You probably hear my hesitation. I'm annoyed, but I'm annoyed by the solar. But in fairness, as somebody correctly pointed out, it should not have been a surprise. I want everybody to hear me now. I did not do any research when I decided to build an ADU. I saw the headlines. I had a house in my portfolio that I always wanted to build a second home on. And I'm like, I can't find any deals that make sense. I'm going to build an ADU. I did not do my research. And again, I have no problem admitting my mistakes. The first mistake I've already admitted. The first $2,000 was a complete waste because I built the biggest home possible, which I think was 1,250 square feet. Might have been 1,200. I forget. It's 9 months ago. I did not build the best return, which I subsequently fixed and now is approved minus the solar. So yeah, I think I'm going to do it. And where I was going with this is the solar, the extra 18 grand should not have been a surprise to me. It's in SB 9 or SB 10 or whatever the, King Newsom signed. It's 100% on me. It was not snuck in. It was not some dirty trick. It was in the rules, and I did not do my research. So shame on me. But again, I share everything, the good and the bad. So don't be stupid. Go to your city and see what the rules are. Make your decision. Make it an informed decision versus a quick and excited decision. So yeah. So I think I'm going to build it. 40 pages in the book. Really good. Going to knock out another 40 pages after the stream. That's cool. Enjoy. Have fun. I really, and again, if you've read this book and you haven't left a review, love the help. If you can write one whenever you're done. I think we're almost to 1,100. It's kind of amazing. Hey, Ramirez Real Estate Team. Good morning. How are you? Where may I buy the 10-year treasury bonds, the one you mentioned earlier in today's? So what I talked about today was the 2-year treasury. And honestly, I don't know. I have never, ever thought about it. I suspect you can buy them in your trading account, but my intention is to ask my 2 stock guys. So we have 2 stock folks, Dan Bird, who's more of a trader. He might know, but I know with 100% certainty, Taylor will on Mondays. So that's my intention to ask them. I already have the topic right over here for Taylor. I don't know. I'm guessing you buy it online, but no idea. I've never even thought about it. Most of my life, I had no money. I had no cash, so I wasn't worried about it. Yeah, I mean a 2-year treasury. I mean Jim Cramer bought one or some. I don't think it's one. I think it's a numerical amount. I mean the 1-year treasury hit 4%. That's crazy. It's crazy. So more to come, Ramirez. I don't know yet, unfortunately. I'm pretty sure you could buy it in Charles Schwab and E-Trade and those places, but not sure. Never again. I've never thought. I can't believe I'm actually thinking about buying a treasury. I must be old. That's what it must be. Ooh, 13%. Nice. Ooh, nice. That's my story. I'm sticking to it. That's funny. Good morning, Investor Wealth. Good morning, Mandy. Good morning, Anna. Yeah, the iBuyers. Again, it's I've actually talked to some folks off the record. They actually had horrible compensation models. They did. They had basically divided teams. They had a buying team, a remodel team, and a selling team. Each team was compensated individually. So if those three teams exist, the only team I want to be on is the buying team, because their compensation model was how many houses you can buy, not how good of deals you got. If you give a salesperson an unlimited checkbook and you reward them for buying homes, guess what? They're going to buy a lot of shitty homes. Their compensation model, which drives behavior, was stupid, dumb, broken. Yeah, dumb. Chester, yep, Black Knight. Inca Warrior. Have you seen how grossly inverted the yield curve is? If Fed hikes was right move, wouldn't the yield curve steepen? I think the yield curve, I don't think the Fed controls the yield curve. I think the yield curve is controlled by the market and the bond market. I think the Fed controls one rate and one rate only, the Fed funds rate, the daily or the overnight rate. I think the yield curve is a tremendous indicator that a recession is in the offing. The 2 and 10 has been inverted for, I don't know, 90 days, 100 days now, long time. Great recession indicator. But no, I don't think the Fed cares about that at all. I mean, it's often talked about, but the Fed doesn't control rates. It's a bond market. It's a big world out there. Um, no, I think the bond market is telling you we're in a recession. The Fed doesn't control any of those rates. The Fed doesn't control the 90 rate, the 1 year, the 2 year. It influences them. But yeah, they don't look at that. But the yield curve is clearly showing recession, recession, recession. Yeah, just the real yield curve inversion, it doesn't happen a lot, but when it does, it's a huge red flag, is the 90-day and 10-year. The most often quoted is the 2 and 10s. But yeah, if the 90-day ever inverts with the 10-year, ooh, watch out. That's a problem. Thank you, Elise. Hit the like button. We've got 195 amazing people watching. Thank you. Thank you. Oh, we're at 191. Oh, well. And 54 thumbs up. Thank you. Do you think condo prices will drop? I have no idea. Don't know what market you're in. Traditionally speaking, condos are the first-time home buyers entry point. As rates go up, first-time home buyers fall, affordability falls. But if we see more and more first-time buyer, zero down, nonsense loans, could go up. It's a very interesting time. I have no idea. Don't know what market you're in. Don't know. Do I think condo prices will drop more than house prices? Well, again, you got to be careful with questions like that. I think numerically speaking, houses are more expensive, so they'll drop more. I think what you're asking me is a percentage basis versus a absolute number. No idea. I don't think about it. I've never thought about that. I only buy houses. I have one condo in my portfolio. No idea. Don't know. I think it's going to be I think it'll actually be market dependent. I think there are some markets that all the new building is condos, and then there are some markets where condos really aren't. They don't really build a lot of them. So I think it boils down to supply and demand. So it's really about your market. Michael, what do you think are the risks of a short-term rental units that are out here that didn't exist in '08? Many are leveraged insanely. Could that be weakness in a recession? Yeah, I think that's very market dependent. I think one thing that didn't exist in '08, to your point, was the short-term rentals, overnight, daily rates, whatever you want to call it, VRBO, Airbnb, and the like. I think one thing that a lot of cities are starting to see is that as Airbnb or short-term rentals come on the market, inventory of homes and traditional rentals fall. And there are now cities, and I suspect a lot more cities are going to come after short-term rentals. I think it was San Diego. It's not my market, so it's an article I read a few months ago, I think, maybe weeks. San Diego is basically creating a cap. I think it was 1,000. I think Honolulu took rentals to 30-day min. I mean, I think the cities and counties are coming after short-term rentals, at least many of them. I do think a lot of people got into short-term rentals over leveraged. I think a lot of the vacation towns are in trouble. I think yes, I think my opinion never changes. Anytime real estate investing is perceived as easy money, there's a bubble going to be blown and people are going to get hurt. I think people are pitching Airbnb and Airbnb arbitrage and all of these things, which is amazing the last couple of years. It's going to hurt a lot of people. It is. It is. It's going to hurt a lot of people. But again, I have Anna Kelly, who's our Wednesday expert and longest running guest. She does Airbnb in short-term rental towns on the water. Like, to use a Monopoly analogy, Anna Kelly is buying Boardwalk and Park Place. She's going to be fine. But the people that buy down the street, around the corner, across the railroad tracks are going to get smoked. I do not have warm and fuzzy feelings about Airbnb or short-term rentals. There will be some people that do amazing. But the amount of people that got in that thought it was easy, that's a huge red flag for me. TV 86. Does your course go over best practices for turning your first owner-occupied house into a rental and buying another home to live in? Nope, not even covered. Not a topic. I've never done it, so it would not be done by me. I suppose I could find an expert and add bonus content, but in fairness, nope. That is one topic we do not cover. We probably should, but as of today, we do not cover. Sorry. Chris, you got 49 units, half single family, half apartments. I'm looking for single family. I'm not looking for single family deals anymore. Stacking cash for bigger apartment deals, 23, 24 thoughts. I don't know your market. No idea. I think you've probably heard me. You've actually, if you were paying attention Friday morning, I dropped some gems about community banks in the daily financial news. I think there's a lot of pain coming. I think the 5 through 50 units, kind of that small stuff that's too small for the big players. I think there's a lot of people that overpaid, have bad loans. I think rent's going to get soft. Yeah. I mean, the only thing that kind of that I kind of repel from in that question, Chris, is I don't think you ever stop looking. You just never know when a great deal shows up. So I'm essentially doing the same thing with only one pivot. If I'm going to pull a trigger today, it's very likely going to be single family. Actually, I should step back. It's likely 2 through 4 units. right? This whole marketing campaign, I'm dropping $800 on a month. This market crash thing, I'm only mailing it to duplexes, triplexes, and quads. So residential loans, I guess I should say. I'm doing that because that's where I think the opportunity is in the short term. Long term, as I said, I think yesterday or the day before, my full plan is to repeat what I did in this book. I took 8 houses and 1031 exchanged into 80 units. I want to do that again. So in order to do that, I need some more residential units. So I think the strategy you have, Chris, is kind of mine. The only caveat being I never stop looking. You never stop looking. Never stop looking. You just never know when the deal of the decade comes along. So other than that, there you go. Hey, Dividend Dave, how are you? Patrick Bet David says there will be a 30 to 40% correction in prices of homes. Any thoughts? Don't know the time frame he's calling for that. Don't know. Is he calling for a national crash? Is he calling for? I don't know. I will say I don't see a 30% crash in any 12-month period for the nation. Could the housing market go down 30% over 5 or 6 years? Sure, could. Could one market fall 30%? Absolutely. No idea. I have not seen that video or article or newsletter or email or whatever Patrick Bet David sending out. So I would need more information. I don't know. Has Patrick Bet David ever been a real estate investor? Doesn't he sell insurance? I don't know. Maybe he is an investor. I don't know. I don't know. No idea. I am not calling for a 30% crash in 2023. Again, Rick, the largest national housing crash in the most epic disaster dumpster fire of real estate was negative 8.9. So if Patrick Bet David is calling 30% in 1 year across the country, I have my suspicions. But again, I don't know the details around that call, so hard for me to say. Oh yeah, yeah. He's probably buying big ones. Weston Knight, you're what? Thank you. I will keep rolling, keep doing my things. Layla with number 9. Congratulations. Weston, to your question, this I don't know why. I don't know how to communicate this better. You don't time the real estate market in my world. You look at it every freaking day. Every day. I hate crash callers that try to pick a month. That is idiotic and stupid. You should be telling your viewers, guys, the market's richly valued, kind of peak pricing, blah, 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 blah. Only buy great deals. The thing that annoys me most is like they give you permission to sit on your ass. That is the most stupid and unhelpful thing I have ever heard. You want 6-pack abs. Congratulations. Work on it every day. You want to buy a home next year? Great. Look at it every day. You have to learn. The housing market has a pulse. It has a vibe. It has a flow. You never know when you could bump into a seller. Weston, here's a real life example. I bumped into a seller. I should say I bumped into an owner that became a seller probably 3 years ago. He found me somewhere, knew someone I knew. I'd never met him. He asked to meet Olivia and I. the next time we were in town, because I don't actually live in the town I invest in. So we went up there for some reason and we met him over lunch. We started talking. I mean, I didn't know what he wanted, but we said yes. And we have lunch. We get to meet him. He vibes with Olivia and I. And he goes, I want to show you some property. All right. We got an appointment at this time, but we got an hour. Let's go. So he shows us a fourplex and he shows us a triplex and he shows us a house. And he goes, what'd you think? And I go, kind of same stuff we buy. We own one around the corner there. We own one over there, and go blah, 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 blah. He goes, well, I own 14 units and I'm done. I'm like, what do you mean you're done? He goes, I'm done. I'm whatever, 71 or 68 or whatever it was. And I want to sell, and I want to sell to you too. Well, I'm like, thank you. But I'm not sure we're ready to buy 14 units, right? We're looking for one or two, houses. Like, I think at the time we only could buy one house. And it's like, no, you don't understand. I own these houses free and clear. I want to sell them to you because I know what you guys are building and you're going to own them for a while. I'm not going to sell them to a wholesaler. I'm not going to sell them to this. I'm going to sell them to you. I'm like, well, okay, what do you want? Tell me more. And he's like, these properties produce, I don't know, 12 grand a month or whatever it was. And all I need is $5,000 for the mortgage. I'm like, interesting. Because not only do these produce 12 grand, but based on my quick math in my head, it should have been 16 grand. And he's only asking for a mortgage payment of 5 grand. I'm like, okay, interesting. There might be something there. But oh, by the way, we only have X amount of dollars. He goes, don't worry about it. I'm not going to use an agent. I'm going to sell myself. I don't want a lot of cash. Cash is a problem. I'm like, cool, because I don't have a lot of cash. And we just keep going. Long story short, he hands Olivia and I $500,000. He hands us on the tune of $3,000 to $4,000 a month cash flow. And he gave us an interest rate that is something I will never touch. If I was waiting for March and not doing the work every day, I would have lost that deal. Oh, by the way, that was $500,000 3 years ago. It's probably $1 million today. So I share that long story not to brag, but to tell people, do the work every day. I hate people that preach fear and tell you to do nothing. Wait. That is horrible advice. Do the work, and if it's not a deal, don't buy it. Hopefully that makes sense. Sorry, I got a little ranty, but it just annoys me so much. Yeah, I'm going to say that's Sheena. You're absolutely right. ARM purchases currently are low, but they're going to go up. They've already gone up from 2% of originations to 12 or 13. To your point, they will go higher. They will unquestionably go higher. If rates go to 7, 30-year fixed, 5, 7-year ARMs might be 5 3/4. You're absolutely right. They will go up. Absolutely. Is that a problem? Not in the short term. Might be a problem later, but yeah. Thank you very much. Yeah, stop buying stupid shirt. Yeah. My team is working on a couple of creative designs. I will create it, and I have no problem having a purple shirt. So I will ask. Walter, how you doing? Buying treasury? Congrats. I honestly never thought I would buy treasuries. It just never. I always thought treasuries was for like insurance companies, and I never thought. But I'm for the first time going, what rate would I buy? I don't know. Funny to think about. Yeah, rates. I don't know. Yeah, rates. Man, I don't know. I don't know what's going to happen in the economy. I don't know what's going to happen in the world. We could be in a worldwide recession in March, or this world could be over. China could be doing something different, and we're back to cranking. I mean, there is such a divergence. I I got to be careful. Let me think about this before I just blurt it out. I don't know. I cannot recall a time where I was so unclear about the next 6 months. The next 6 months could be this epic disaster, or it could be, you know what? A couple things go right and we're in a better spot. It's really weird. Really weird. What do you think inflation numbers get to when the strategic reserve starts getting refilled? Oof, that's a great question. Well, again, you've got to understand there's a lot of economic variables inside the inflation. It's called base effect. Simply said, it's a rolling 12-month and you roll off the last 12 and you add a new one. The base effect starts working in the Federal Reserve's favor in October, I think. It's either October or November. I think it's October. What that means is you're rolling off bigger and bigger numbers. So, anyways, it's a very complex question that most people don't understand. But given they're going to start probably replenishing the strategic reserve this year, which means in the winter, given that the base effect helps them in October, again, I don't know. Like, is this war? Is the war? If the war is over, so the Ukraine war or Russia war or whatever we're calling it, if the European war ends peacefully somehow, some way tomorrow, I think the 9-1 that was printed is the high water mark. If that horrible atrocity continues through the winter, there is a chance that 9-1 is not the high. So I don't know if I answered your question, but I do think it basically, does Europe energy stay at zero or does Russia turn it on? That's what I'm thinking. Should you be worried if you bought a home last month? You bought a home last month. I don't know that worrying helps. It's like you're pregnant. You're already pregnant. If you're going to live in your home for 5 to 10 years, doesn't matter. Oh, by the way, you probably have a low interest rate. So congratulations, or lower than they are now. Congratulations. Why stress? If you bought a home last year, enjoy it. I mean, what does worrying help? Any word from Rylas? No, not yet. We're trying to figure out dates and other folks. Not yet. Michael, for your buy box in Fresno, what's your outlook for the next 1 to 3 years? Flat. I hope it's flat. It's freaking unaffordable in Fresno. Yeah, but the problem with Fresno, because it's not really Fresno. So if we don't have any government intervention, flat. My fear is we get more now, no zero down loan programs. We get the executive branch or the president to say that everybody deserves a home like President Bush, and that could start a very dangerous cycle. But what does that mean for me in my buy box? It means the prices of stuff I own go up 20, 30, 40%, and I sell. I don't want to sell, but if you take all of my, 300 homes and make them worth 450, of course I'm going to sell. Why not? The rents. What's going to happen if the government gets involved is they're going to create first-time home buyer programs. I own first-time home buyer homes. It's going to add demand when there's no supply. Prices are going to go up, and at some point, I'm going to say, just like I did in 2007, time to sell. I hope that doesn't happen. I want to own this stuff into my 90s. But again, if Mr. Biden, President Biden repeats what George Bush said or creates similar programs, a lot of the homes I own will go up 50% fast, and I'll sell. I hope that doesn't happen, but it could. I agree. The Fed, this is my last question because I have to get ready for the 9 o'clock. Given this fact, what is the point of increasing Fed funds rate? Because the Fed controls the front end, which basically banks use as feeders to everything else. It's a way for them to turn on and turn off the tap of liquidity. It is absolutely very important. Um, yeah, they've got really, for most of my adult life, they've only had one tool: open, close, and that was Fed funds rate. Since then, they've added buying corporates and being the biggest buyer of this and that. So they have more tools now. The printing press, but for most of my adult life, before QE was a thing under Greenspan, I believe, all they had was that. That was how they encouraged or took out liquidity, which banks use liquidity to make money. So it is very important, often misunderstood, but an important nonetheless. So, all right, folks, there we go. Thank you very much for your time. If you are one of my students and you have the invite, I will see you in about 4 minutes for a 60 to 90-minute deep dive with the one and only Mr. Bob Langworthy. Take care. Bye.